Hi everyone, welcome back to another video. And today we have a very great topic on our hands, which is should you buy a house for the tax deduction associated with it? Should you avoid paying your mortgage early because of the tax break that is associated with it? These are some of the common pieces of advices that I've seen people throw around, but for most taxpayers today, they are basically myths. The truth is that the mortgage interest deduction doesn't even help nearly as many people as you think now. And in 2025 and 2026, with the standard deduction number going so high, most families won't see a tax break at all. So today I'll show you real numbers for both tax year 2024 and 2025. And you can see for yourself that if this is a so called tax break or not, or if it really works and saves you money or not. So, the mortgage interest deduction lets you deduct the interest you pay on your mortgage, but only if you itemize your deductions. To itemize your deductions, the mortgage interest, property taxes, charitable contributions, and certain medical costs must be greater than your standard deduction. Otherwise, you won't be able to get any benefits from any of these deductions if they're underneath or they're lower your standard deduction. So for 2024 tax year, the standard deduction for couples or joint filers was $29,200, and for single taxpayers, it is 14,600, and for head of household, it is 21,900. For 2025 tax year, which will be the taxes you'll file in 2026, the standard deduction is jumping even higher. So it will be now $30,100. And if you're single or separately filing, it will be $15,050. And for head of households, it will be $22,450. So if your itemized deductions don't exceed these numbers that I've just told you, then you basically don't itemize and you'll claim the standard deduction. And that means that you get zero benefit from your mortgage interest. Zero, nada. So here's where the myth lives. People say that I paid $10,000 in mortgage interest, so I saved $10,000 on my taxes. Big no, big myth. That is absolutely not true. You don't save dollar for dollar. So let's say you filed married filing jointly in 2025, and the standard deduction now will be $30,100. Your itemized deductions, let's suppose hypothetically your mortgage interest, property taxes, and you made some charity, all of these add up to 31,000. That's only $900 more than your standard deduction. So if you're in the 22% bracket, for example, that's like extra $900 of basically deductions that will reduce your tax bill, right? What that ultimately means is that you'll only save $198 in taxes, paying $10,000 in interest on your mortgage. Of course, that's not a smart trade, right? You're paying $10,000 of interest to save $198 in taxes, because keep in mind, it is not a tax credit. It lowers your income but doesn't reduce your taxes for dollar to dollar. So let's make up another example. So let's say you bought a $350,000 worth of home, 6.5% interest. In the first year, you'll pay around $22,000 in mortgage interest. Let's just assume that. And let's add $6,000 in property taxes as well. And let's say you donated $2,000 to your favorite charity. So now you're sitting at around $30,000. For 2024 taxes, if you filed them already, your standard deduction was $29,200 for married filing jointly. So your benefit from itemizing will be roughly $800 more than your standard. So if you're in the 22% bracket, that's about $176 worth of tax savings. For 2025 tax year, let's take that into consideration for a second. The standard deduction, of course, will jump higher than in 24, which will be $30,100. So now you're only basically subtracting an extra 100 below it. And so you would just take the standard deduction, because now since the standard deduction in 25 has jumped higher, your itemized deductions are now underneath that number, so you won't be able to itemize at all. So you would just simply take the standard deduction, and your $22,000 of mortgage interest gives you no tax benefits at all, meaning that all of those deductions that we just talked about gave you zero value at the end of the day. So while you might think that your mortgage is saving you big money in taxes, in reality, the math shows simply otherwise. That's not the case. So now some homeowners might benefit, like people with very large mortgages and high interest payments. Those in high tax states where property taxes are actually higher and state income taxes are, of course, higher, you can push your itemized deductions, of course, a little higher. So families who also give generously to, like, who are really generous and donate to charity a lot, could stack up higher deductions than standard. But again, these are exceptions. For the average middle class family in 2025 or 2026, the standard deduction basically wipes out any chances of itemizing. So, should you avoid extra mortgage payments just to keep the tax deduction? Absolutely not. If somebody advises you that, hey, don't pay extra on your mortgage, you're going to lose all the tax deductions, there are absolutely no tax deductions if you fall in those brackets that I just showed you. So, don't listen to any advice like that. Pay as much as you can. You'll save an interest in the long run, which is always beneficial for you. The deduction doesn't reimburse you for all the interest you pay. It only gives you a tiny fraction back. So if anything, paying down your mortgage saves you thousands in real interest over time. So skipping that just to like chase a small deduction in taxes is like burning a dollar bill to get a quarter back. So the bottom line, your home is a powerful financial investment, but not a magical tax shelter. So for 2025 taxes, the standard deduction, like I said, for joint filers is 29,200. For 25, it will even go more. And every year, because of inflation, it will go higher and higher and higher. So most families will never itemize, which means that your mortgage interest doesn't reduce your tax bill at all. So if you want to know exactly where you stand, of course, I can always help you. You can leave a comment. I'm an enrolled agent and I'm licensed by the IRS to talk about taxes, to prepare taxes. And this upcoming season, we have a beautiful offer for small taxpayers like you. If you click the link below and just fill a 5-second form, quick form, your email address, your phone number. If you do that before the end of December, we'll do your taxes for just $100 flat fee. That includes your federal, that includes your state. So it's a great offer we have right now for early customers who sign up. You don't have to pay right now. You just have to show your interest in this program. Click the link below, fill the form, and you'll lock in your $100 offer for this upcoming season. And if you like this content, go ahead and subscribe to our channel. We usually post videos like these which provide value to you at the end of the day. We want you to grow financially, make smart tax decisions at the end of the day. And I'll see you in the next one. Have a great day.